All right. Hello, everyone. My name is Zack Hirschfeld with Prodigy Finance. Hope you're having a wonderful day so far. I'm broadcasting live from the Prodigy Finance headquarters in New York City. And so I'm excited to bring this content to you today to talk more about Prodigy Finance and how we can help you fund your studies at USC. So it was so nice enough for the Association for Indian Students at USC to help organize this webinar for us. So we're really grateful to be able to give you this content for those students. So really excited and looking forward to getting into some of the content now. So I will start to share my screen here. And as you can see here, this is I have the presentation up. So once again, this is a webinar specifically for funding your master's degree as an international student at USC. So we have a great presentation here for you today to discuss all the questions you may have about securing funding. We will have a question and answer period at the end of this presentation. So if you could utilize the questions box in the GoToWebinar control panel, that would be supremely helpful. That way you can answer your questions during the presentation, and then we can get to those answers afterwards. We also do have Madhu, who is one of the leadership of the AAS at USC. She is on the line as well if you need to ask any particular questions that are related to more the Association of Indian Students as opposed to Prodigy Finance specifically. But as a general rule, this content will be specifically geared towards financing your upcoming degree. So very exciting to get into that. I do have so we will have our current student Supriya, who is joining from the USC campus. She will be joining us shortly. So very excited for her to join as well. So going into the presentation, let's start away. And like I said, if you have any questions, please do let me know if you have them in the questions box. So first off, I want to start and say, hey, welcome to USC. This is so excited that you're going to be attending such a great school. Very exciting step for you in your journey, and we look forward to helping you out whenever possible. I do want to ask a couple of questions of the audience, and I'll actually share this a poll question here. This will give me a little bit better understanding of how I can best tailor this presentation for you. So if you could please just let me know a couple of these answers. So first off, when did you receive your admit to USC? Has it been recent as of this month, or did you get your admit earlier on in the season? Great. If we could get, thanks for voting. If you could get, if we can get everyone to vote, that would be great. This would be really, really helpful. All right, one or two more people. All right, perfect. Thank you so much. Great. It looks like actually quite a spread out group here. Thank you for letting me know. There's Supriya.
Yes,
You can
hi.
say hello
I'm
to.
really sorry.
Oh, not a problem at all. We just got started, so we're going through a couple of questions now. So
Good.
the next question that I want to ask is, for your studies at USC, have you secured a loan sanction letter? And you can tell us if you secured it from Prodigy Finance, maybe another lender, or if you're still in that decision phase of which loan to take, or simply tell us that you haven't you won't be needing a loan at all. Perfect. Thank you so much. One or two more people, if they could answer, that would be great. Amazing. Thank you so much. So it seems like a number of you are still in the deciding phase of which loan to take, which is totally normal, and we hope to answer your questions today to help you feel more comfortable with this whole process. Two more questions, and then I promise we'll get into the material. Is just for your understanding of Prodigy Finance overall. Did you know about us before attending this webinar, or is the whole idea of Prodigy Finance relatively new to you? Again, this will help us best tailor the presentation to see, where we need to go more in depth and where we need to do the opposite. Okay, great. So looks like most of you have heard of us. Some maybe just a little bit, and a couple of you it's your first time. So that's exciting as well. And then first, and then last, I should say, how many of you actually have been to our website to look around? As you'll know from the presentation that I'm about to give, Prodigy Finance is completely online, which is actually quite different from a number of other lenders or loan providers. So a lot of information can be gathered online, but I just wanted to get an understanding of how many of you have actually gone to the website to look at information. Wonderful. All right. Okay, thank you so much for those poll votes. Really helpful. Great, so let's get into the presentation a little bit more. So for those who may have joined a little bit later, again, my name is Zack Hirschfeld with Prodigy Finance, based in our New York City headquarters. So I'm really excited to bring this information to you today, and I'm joined along with one of our Prodigy ambassadors and borrowers, Supriya, who is actually tuning in from the USC campus. So very excited to bring this to you today. Here's a little bit of the agenda that we'll go over. So first, we're going to go over our track record and story. So what is Prodigy about? Where have we come from? How old is the company? All that stuff. We'll then go through the application journey. So you as a borrower, what will you go through from start to finish? How that looks like, that'll be a brief overview there. And then we'll get into some terms. I know a lot of students actually ahead of joining today's webinar were a little uneasy about a few different terms, such as LIBOR, what is a variable interest rate, and what does APR mean? Some of these terms might be new to you, so I'll go through all of those with you. We'll go through a repayment scenario, so how exactly it looks like to repay a loan and what effects that has on the total amount that you'll be repaying to Prodigy. We'll go through a little bit of compare and contrast Prodigy Finance versus some other providers. We'll talk about membership. So as you get a loan from Prodigy Finance, what you can access in terms of membership benefits. And then we'll have some open Q&A. So like I said, if you could utilize the questions box, send us your questions, send the questions to me, send the questions to Supriya, and we'll be more than happy to answer those questions at the end. But me and Supriya will be talking throughout this presentation just to give you a little bit more better understanding about Prodigy, life at USC, etc. So without further ado, I want to first touch on some key points here. So some of you, it may be a second or third time taking a loan. Some of you, it might be the first time you've ever considered taking a loan. So I put these points here to really best capture what types of questions you should be asking and what things you should be considering. So first of all, at a very base level, should you be using collateral as a way to finance your program? Some students or some of their parents might have assets as collateral, some might not. Some pieces of collateral assets might be specific, might be very important to your family for whatever reason, and you're not willing to part with that asset as collateral. So that's something to really consider here is, do you take a secured loan or an unsecured loan, how that works for you. Another point to consider is that when you're taking a loan, all interest rates are variable. So as we'll go on in a few minutes, every education loan will have a fixed margin and a variable base rate, regardless of if it's a lender in the US, it's a lender in the UK, if it's a lender in India. Everyone will use a particular base rate, LIBOR, MCLR, etc., and I'll go into that specifically. So that's really important to consider. Thirdly, is your loan going to be calculating interest on a simple interest basis or compounding interest basis? Those may determine how much interest you accrue. Are you aware of all the fees? So are there any alternative fees that may not have been disclosed to you at a particular time, such as a sanction fee, a disbursement fee, foreign exchange fee? All of these different fees can add up to a more expensive loan for you. In what currency is the loan? So where, what is your tuition going to be charged in, and what currency of a loan are you taking on? So that's something to consider. And another further question on the back of this is, where are you going to repay from? So are you going to be earning in US dollars? Are you going to be earning in INR? Are you going to be earning in some other type of currency? Maybe after USC, you decide to move to Canada, you might be earning in Canadian dollars. There's all these different aspects in play. And furthermore, and where do you plan to work after graduation? So what type of job are you looking to get? What types of salaries do you anticipate getting? And then what is your real appetite in terms of taking on a loan? And how can these questions overall inform your decision to either take a loan or not? And if you want to take a loan, which option should you choose? So in terms of a little bit of background around Prodigy Finance and really Prodigy Finance, so we've been around for over 10 years now. And the basis for Prodigy was to solve a number of those issues and consideration points that we just discussed. So the basis of Prodigy Finance was to create a program that allowed students, regardless of where they're from, to get a quality, affordable loan without collateral, without a cosigner, to study at their master's degree. So wherever they're going to school, whether you're going to the US, Canada, UK, somewhere else in Europe, China, wherever the case may be, if you're going abroad, we want you to be able to have an affordable option. And this was actually born out of our founders were from South Africa and went to school at INSEAD, which is actually the top ranked business program by Financial Times. And they, as international students, found it so hard to get an affordable loan. So they couldn't get the loan amounts they wanted. They couldn't get the interest rates that were competitive and that they thought wouldn't burden themselves. So they set out to actually create a business to solve this issue. So 10 years ago, we started this. Over that timeline, we have dispersed more than $500 million of loans to thousands of international students. So thousands of international students across the top schools around the world. That's business, that's engineering, that's law, public policy, these top programs like USC, we've been able to support. And actually to date at USC, we've funded more than 150 students at international students at USC, and actually with respect to India specifically, more than 100 students. So it's super exciting, and we've seen such great demand from students for our services. So we're really excited to see, as our company grows, our impact grows even further. So how are we able to do this from a lending standpoint? How does this even work? You can say, oh, how do you lend to students without collateral, without cosigner, all these different features? So these are the 5 pillars that I like to speak about in terms of how we can actually do this. And I'll go over these quickly. So the first is affordability. So unlike any other lender, we actually forecast your future affordability based on the specific degree that you will be getting at a specific university. So like, let's say you're going to MS in computer science at USC. We have a specific model for your program to say, okay, this is where you're coming from. This is the program that you're going to. This is what we believe you can afford in the future. And that's the basis that we give out the loans. And that's why we've had such great success to date, is because it's really a data-driven model that uses very advanced algorithms to calculate future affordability. Secondly is enforceability. So we have a loan agreement that is enforceable in over 150 different countries. So if you take India specifically, as you may have heard, there's been some cases where domestically in India, if you get if you take a loan from an Indian bank or somewhere else, and then you actually decide, no, I'm not going to pay it, I don't want to pay that debt back, you can actually leave the country. And some prominent businessmen have actually left the country, and those loan agreements are not enforceable outside of India. So this is a loophole that some people have chosen to take advantage of and to not pay. This can be a huge issue for lenders, whereas for us, it's not, because we have a unique enforceability model that our loan agreement is enforced across any different country around the world. So if you're going to work in 5 different countries, we can actually enforce if you decide not to repay. And that's a really important issue from the sustainability of our business model, and is why we have such a robust lending program to date. So it's really important to consider that we're unique and well positioned in this respect. Thirdly, our governance is based by the UK. So we're a UK-based lender, and the UK government has the Financial Conduct Authority that governs our space. So if you have any complaints, if you have anything that goes wrong with your loan that you believe is unethical, go to the UK's Financial Conduct Authority, and they will come down on us, and we will be held responsible. And that's really important to consider, is that although we work across so many different countries, we are still held responsible by governments to actually do what we say we are going to do. So that should give you some peace of mind to say that, you know what, we are acting in our best conscience and trying to help you as a consumer, as a borrower, and we can be governed by the UK in this respect. Fourthly is cooperation with schools. So we work with a wide range of schools across the globe, and also specifically with USC. So we have relationships with offices of financial aid, with student clubs like the Association for Indian Students, and we actually know what's happening on the ground in your particular campus, and we can best understand how to treat you as a USC student. Furthermore, we share a shared online platform with USC, so they can actually approve the loan that you're going to be taking, and actually accept the disbursement on your behalf in accordance with the tuition due date. So that's actually a really nice feature, that we actually take care of everything for you with respect to the school, and that's because we work so closely with each school that we work with. And finally, as I mentioned, everything is online. So we're a 21st century product. Everything is online. You don't have to be bothered about making an office visit or sending us information through snail mail, or uploading, or having a paper document that you need to send. Everything is done online. It's super quick and fast, and we're agile in terms of improving our product even further. So hopefully that gives you a little bit more background on exactly how we can do it. And as I mentioned before, these 5 pillars since 2008 have allowed us to gain a lot of student demand, and have really grown our momentum in terms of growing as a company. So actually just recently, we were invested in by Index Ventures, which I'm not sure if you're aware of that VC firm, that venture capital firm. They're based in London and in Silicon Valley. They've invested in companies like Facebook, Dropbox, Trello, these big companies. And as you see here, this is taken from their website. we're right next to these other great companies. And this has allowed us to even grow further and give you, the student, more resources to be able to succeed as you look for your master's program. So that's something that's very exciting for us. So as I mentioned, some of this may be a lot of information. Please use the questions box to ask questions if you have any particular concerns or questions regarding this. In terms of key features with Prodigy Finance, and so going into the actual, what does this mean for you? The key features are stuff that with Prodigy, there's no cosigner, collateral, or guarantor required. So we never ask for any of that. It's all based on you and your future affordability. In terms of a deadline to apply, there's never a deadline. So you can get a loan now before your studies or during your studies, next semester or anytime during the year. And thirdly, loan applications are per academic year. So you're actually not locked in to taking a loan for the entire 2-year program. If you have a 2-year program, you can actually adjust your loan terms year over year to say, no, I'd actually want more or less accordingly. In terms of a fee, as I mentioned, it's really important to look at what fees are charged for your particular loan. We only charge one fee ever, and that's 2.5% of the total loan amount. This is a not due up front. This is added to the total loan amount, as I'll discuss later. But this is the only fee we ever charge, and it is not due up front. So you don't actually pay anything before you get the disbursement. You pay upon 6 months after graduation. And lastly, no fees for early repayment. So you can repay from anywhere around the world, and there are no fees for doing so. If you want to pay the entire loan early within 1, 2, 3 years, you can do so, and there's no fee charge for that. So now I want to give it over to Supriya, who can share a little bit of her experience as a Prodigy borrower and as a Prodigy ambassador, actually, on the USC campus. So a little bit first about Supriya. So she is in the MS in electrical engineering degree, specifically around computer networks. And as you can see here, she's from Bangalore, graduating this spring, and she's got on to some great, exciting endeavors after graduation. So Supriya, if you want to say hello and maybe where you're tuning in from today.
Sure. Hi, everyone. So I'm Supriya. I'm actually joining from Santa Clara right now. So I just done with my internship with NVIDIA last week. So I'm still here. I'll be graduating like this Friday, flying to USC on like tomorrow. Yeah, it's been a great journey doing MS in USC, and yeah, of course, Prodigy really helped me a lot. Yeah, so when I had no choice about funding my studies, as you know, like Indian banks are really very difficult to get the loan without a collateral or cosigner, and to fund the entire program from Indian banks are really difficult without collateral. So that time Prodigy really helped me because everything was online, first of all, and they didn't want me to sign anything like cosigner or collateral. And the most important part was they give the funds directly to USC, which made my job really easy. Like I didn't have to go through the hassle of converting from Indian banks to here, like call them up. I've seen my friends going through a lot of troubles when they were taking loans from Indian banks. So in that way, there are many good things about Prodigy. And till now, I was not supposed to pay anything back. Like after my graduation, I'll still have 6 months. I mean, that's a plus point. When you don't have anything to start from, like the 2.5 administrative charges also is more when you're paying up for your rents and stuff when you start MS, right? So all those things are very good with Prodigy, I would say. If you guys have any particular questions or something, you can just ask me about it. I can tell more on it. Apart from that, yeah, I'm just happy being an ambassador to Prodigy. And yeah, I was the first one to apply from USC. And I mean, there was no, as Zack mentioned, it is specific to particular program and particular university. So my program was not there on the website. So it took a bit more time, like 3 to 4 weeks to get the program on the website. But once it was on the website, it just took me like 1 week to get my loan approved. So yeah, it was kind of easy. Everything was online, and it was great till now. And about the repayment, so as Zack mentioned, so you don't have to take for the second year. You can actually modify how much ever you want, right? So when we start our MS, we would not know whether we get an internship in the summer, or can we save, can we pay back, can we fund our like second year. We would not have any idea. So you could actually rely on Prodigy, and if you have internship in the summer, and if you can save and fund your second year by yourself, then you can tell them like you don't want to take the entire thing, you just want some part of it. So all those features are really, really helpful. I don't think so that is possible with Indian banks.
That's great to hear, and I think that definitely encapsulates some great benefits with Prodigy. We do have some questions that are coming in, and that some questions have been submitted. I think it would be interesting to take one of those questions now, and then we can move forward with the rest of the presentation, if that's okay.
Sure. Yeah.
One question is more around actually the visa process. So I know many students might be going through this process now in terms of securing their visa interview and using proof of funds either for I-20 or the visa interview itself. Could you maybe share if you remember much about that whole visa experience and what that was like for you? Was it stressful, etc.?
Yeah, I mean, of course it was stressful. I mean, I was not sure particularly because I didn't have any backup from my family, like not that much that I can show it to visa and get visa done. So mostly I was relying on the loans I would get, and Prodigy Finance was giving me like more than half of the USC estimation, and that was enough. Like I didn't even get the provisional offer printout was enough for me for the visa process to get my visa approved. You would have to be very responsible when you answer your questions, and you would want to show them that you're confident, you know what you're doing. That's all it takes when you go for the visa interview, I guess. But yeah, it depends mainly on which universities you will be going to and how you're going to fund your studies, and your ambitions, like how confident you are on what you're doing. These are the three main things that you would want to keep in mind when you go for the visa interview. Just go through all the common questions they would ask on their website, and be prepared to show them that what your goal for 2 years, like what would you do after that. And yeah, just be clear, everything works out. That's what I would say from my experience. And yeah, I would want to say one more thing also. Like when I went for the actually visa interview, 15 people who were standing in front of me, they got rejected. I don't know for what reason, but yeah, I was lucky enough to get. Like that's when I actually realized that you should be confident on what you're doing. That's all it takes. Yeah.
That's great. Those are really good tips. Thank you for that. So hopefully that helps answer some of your questions initially about the visa process and using Prodigy as proof of funds for that. If you have any further questions, please feel free. Don't be shy. Use the questions box, and Supriya and I can get to those questions after the presentation is over, and we can get into Q&A. So for right now, I'll go through a few more slides of the presentation, and then we can continue with your questions. All right. So the next thing I want to talk about is the application journey. So what does it actually look like when you decide, okay, I want to explore a Prodigy loan? How does this work? So as I said, everything is done online. So you go to prodigyfinance.com, you have an online application which takes about 20 to 30 minutes to fill out. You give us a little bit more background about yourself, where you're from and where you're going, which program you'll be attending. Once you submit this, and in this submission, you'll tell us exactly how much of a loan you would like in terms of a loan amount. We will actually then, in most cases, we will actually instantly send you that provisional offer. And that provisional offer, which I'll get into in a few minutes, will actually show you, okay, what are the exact terms of the loan. And the reason that it's provisional is that in the verification process, which is next, you will actually need to submit supporting documentation to verify your application is actually correct. So those are the first 3 steps that you'll need to go through in order to then get your loan confirmation letter. So that loan letter is free. You can download it from our website once you're approved, and you can use this for I-20, for Visa, just like Supriya was saying. You can use this for any proof of funding that you need. And then lastly, you'll go through the disbursement process, which, as I discussed earlier, we take complete ownership of that process. You don't need to worry about anything. We liaise directly with the university and disperse the funds on your behalf. You'll then come back to us in the second year if you have a 2-year program. You'll reconfirm that you want a loan in year 2, and you can say if you want more or less. We'll go through that same disbursement process for you. And then in terms of repayment, as Supriya was mentioning, you start repayments for any loan that you take with Prodigy 6 months after graduation. So you don't have to pay any interest during school. You don't have to pay any repayments during school. You certainly can if you want to. There are no fees, like I said, for early repayment. So you can pay interest if you wish, but we do not request that you pay anything until 6 months after graduation. So I want to talk about two points in terms of when you're trying to get a loan with Prodigy Finance. There's a difference between eligibility and qualification. So if we talk about eligibility first, are you eligible to apply for a loan with Prodigy Finance in the first place? So you are eligible if you attend a supported program and you are foreign national within that country of study. So for most of you, you're going to USC, you're from India originally or currently living in India, you would be eligible under this criteria. So for the majority of you, you are set and you are eligible to apply for a loan and to request however much you wish in a loan from Prodigy. At USC, you are eligible to request up to 100% cost of attendance. So you can request up to that amount if you so wish. However, eligibility is different from qualification. And the reason I say that is a lot of this depends on our future affordability model. So once you submit an application and you say, you know, I would like a $80,000 loan total across 2 years. I would like $40,000 in the first year, $40,000 in the second year. That request, along with the rest of your application, will go through our credit model. And based on your future affordability, we will determine whether you actually can afford a loan of that size. If you do, we'll instantaneously let you know and say, hey, good news, you're qualified for $80,000 total. However, in some cases, based on your application, you might not qualify for that full amount. Sometimes you might qualify for only $60,000 over 2 years. In that case, we will send you a message, send you an email and say, hey, I know you requested $80,000, but based on our model, you can only qualify for 60. So that is the maximum that you can receive over the 2 years. Are you able to come up with the remaining $20,000 just so we know that you can fully afford the cost of attendance, the full cost of the program? And that's something really important to consider, is that regardless of if you're taking a loan amount like $15,000 or the full cost of attendance or near it, we need to be assured that you can afford the full cost so that you can graduate and get that great job after graduation. Because again, so much of this assessment is based on you getting that great job after graduation and affording the loan that we are granting you in the first place. So that's something important to consider. And then, like I said, in the verification process, we'll verify documents with documentation that you will upload to our platform, and we go through specific steps to ensure that documentation is valid and will work for your application. So in the provisional offer that both Supriya and I have been speaking about, the provisional offer is what you'll receive right after you submit your application. So after you take that 20 to 30 minutes to submit the application, you'll get the provisional offer, and it'll say 5 things on this provisional offer. It'll have 5 points. The first point is your loan amount. So in your loan amount, and actually on the right here, you'll see actually a screenshot of a sample provisional offer. And as you'll see, there's a loan amount on there for the first year and a pre-approved loan amount for the second year. If you have only a 1-year program, it would just be one loan amount for the full course. You'll have an interest rate, so that ROI figure. That interest rate is on the right there. It is variable. So as I mentioned before, all interest rates are variable. It'll have a fixed margin component and a variable rate component. I'll break that down in a few minutes, but that'll be on there. Repayment term. So what is the term, the duration of the loan that we are giving you? What is the maximum time that we are giving you to pay off the loan in full? So that would be either 84 months, 120 months, 180 months, or 240 months. In layman's terms, if you don't think about your life in terms of months, but actually in years, that's 7 years, 10 years, 15 years, or 20 years. So students at USC are eligible to take loans on any of those terms. But what's important to consider is that, let's say even if you take a 20-year repayment term on your loan, you can still repay that loan for no cost, no fees in 10 years, and you would actually be owing the same amount of interest overall that you would if you took a 10-year loan. This is giving you flexibility if you want a maximum loan duration, or if you want to force yourself to repay early. That's really all this is. The fourth point is the estimated monthly repayment. So based on the term, we will actually tell you, if you took that term, what would be the monthly payments, or the EMI, as many people say in India, what would the EMI be for this particular loan? So you would be paying, let's say, $600 per month to pay off the loan in full over that loan duration. Finally, the annual percentage rate is disclosed. So the annual percentage rate is not the rate at which your loan will accrue interest, but it is a comparison tool that includes the 2.5% admin fee. So APR is a way for you to compare loans at one lender and compare it with another lender that gives you an APR. And this is more or less to get an understanding of, okay, what is the total cost of borrowing? What is the best deal for me? APR will always include all fees that are involved with the loan. As with Prodigy, there's only one fee, so that's why only the 2.5% admin fee is included, and you'll see that affected on the annual percentage rate. If there are any other fees associated with the loan, APR will disclose that, and you'll be able to compare apples to apples. You'll be able to compare loan products more closely. So specifically for USC, as this is a USC only webinar, I wanted to give you specific details for you. So for USC, we actually know your interest rate right now, because we tailor interest rates on a number of different levels, but actually if you're USC, you'll be getting the same interest rate. And that's, as I said, an interest rate is comprised of a fixed margin and a variable base rate. So in this particular case, for USC, your fixed margin will be 7.06%. So it's 7.06%, and this is fixed for the entire duration of the loan. So until you pay off the loan, you'll always have that fixed margin of 7.06%. However, that's only one component. The second and final component is the variable base rate, which is LIBOR. Now, I'll go into this in a minute. This is the variable rate that is decided in London, and it is used by banks all around the world as a variable base rate. So what you would do is simple arithmetic. You would take the sum of the fixed margin and the variable base rate, and that's your interest rate. So if we do some simple calculations here, 7.06 plus what LIBOR is right now, which is 2.34%, combine those together, that's 9.40%. That's your that is what your interest rate will be for USC currently. And as I mentioned, LIBOR will go up or down over the course of the loan. So it can go less than 9.4%, or it could go slightly higher based on where LIBOR goes. As I said, repayment terms for USC is up to 20 years, so you can choose that. The 2.5% admin fee, like I said, is added to the loan amount. It is charged on the first date of the first disbursement of the academic year. However, it's charged to your account, but you don't repay it until 6 months after graduation. As for interest calculation, so one of the points to consider that I mentioned earlier is it simple or compounding? Prodigy loans are simple interest. So you will never get compounding interest with us. It is always simple interest rate, and you can repay your loan from any place and at any time. So what's a variable base rate? Some students might be a little concerned with this idea, but as I said, every education loan will have a variable base rate component. It will be that simple arithmetic, which is fixed rate plus variable base rate. So variable base rate may be used in a number of different terms. It could be a floating rate, a reference rate, benchmark rate, but they're all basically the same thing. And it's this central idea of that we get money. All lenders and financial institutions get money from investors and then lend that money out to the borrowers, you in this case. Our investors come from a wide range of sources. Many of them are directly interested in impact to the students, so they want to provide a loan at an affordable interest rate for students so that they can do great and make the world a better place, as you undoubtedly will do. But investors still need some return. And what variable base rates will do is they will ensure that their investment is safe, because they insulate investors from what we call market risks. So if markets go up or down, variable base rates will adjust accordingly and therefore insulate investors to that particular that volatility in the market. So it's more of a way to ensure that investors are comfortable lending money to then go to you to actually afford the program. So that's really the basis as to why we even have a variable base rate and why every lender has a variable base rate. As I mentioned, these are some of the examples below of base rates that are used. So what is LIBOR? So we use LIBOR, which stands for the London Interbank Offered Rate, and that is determined every day by the International Exchange Benchmark Administration. And it's really important to consider that LIBOR is centrally derived, and that millions and millions, trillions of dollars are actually use LIBOR. So in terms of loans that are given out, trillions of dollars over across the world are using LIBOR. So this is not something that's unique to Prodigy specifically. And at least from my perspective, that gives me some comfort that it's not some number that we're pulling out of a hat that we can adjust on the fly, that we can change whenever we want. No, it's a rate that is actually determined in London by banks and that is actually used across the world. So it's really important to consider. And in terms of transparency for you, if you'd like to know what the current LIBOR is, you can get that at any time. You can simply Google USD LIBOR and get that specific rate for that particular day. So it's really easy to find out what the current LIBOR is. Things to consider about LIBOR and something to really kind of wrap your head around is that you're taking a loan for actually quite a long amount of time. So not just a year, not just 2 years, you're taking a loan for a significant amount of time. And as you may see, as you look at these LIBOR figures and other variable base rates, is that they will go up or down every year. So they'll maybe go up a little bit one year, down a little bit another year. It kind of goes in cycles. It's really important to not get concerned about what is LIBOR doing over the last month, over the last 6 months. Because if you look on the whole trend of LIBOR, you'll see that it cycles up and down. And so when LIBOR goes up, and a reason for LIBOR going up is that actually the economy in that particular area and the job market is actually healthier. So that actually is a sign that you yourself are doing well. And furthermore, when LIBOR goes down, you, the borrower, actually get the benefits of a reduced interest rate. So it actually has a benefit for you to understand, okay, when this variable base rate goes down, I'm actually paying a lower rate in the future and actually going to be paying less during that amount of time. So it's just something to consider, that it's not you cannot think short term with variable base rates. It's more of a longer term understanding of the actual impact on the loan. And specifically with LIBOR, with a Prodigy Finance loan. So how do we actually use this? So we don't change your LIBOR, or we don't change your interest rate with respect to LIBOR every day. We actually do it quarterly, so 4 times a year. So as you'll see, and Supriya knows this from her loan agreement and from watching her loan interest accrual, is that on the 8th day of January, April, July, and October of every year, that is when we adjust the LIBOR rate for all Prodigy loans. So anyone who has an active loan with Prodigy will get a update to their LIBOR on these particular days. So if it goes up, then that particular interest rate for the next 3 months will go up. If it goes down, your interest rate for that next 3 months will summarily go down. So as you can see from this understanding, with Prodigy, you will actually have a slightly different interest rate every quarter, so every 3 months. So you can actually your interest rate could go up or it could go down depending on where LIBOR is, and this is over the course of the entire loan. So it will vary slightly. It's just up to you to fully understand this and get comfortable. If you have any particular questions with exactly, furthermore, how this process works, please use the question box. Please get in touch with us to make sure that we help answer your questions, because it can take some time to understand this, but once you get comfortable, it will put your mind at ease. Next, I want to go over APR. So as I mentioned before, that is a term that we disclose to you in the provisional offer as well as the loan agreement all the way through the process. APR is annual percentage rate. And as I mentioned, it's not your rate of interest. It is a tool to compare the cost of borrowing between lenders. So let's say you take a loan that is a relatively low interest rate, and you have 2 options, a low interest rate and a high interest rate. However, the low interest rate actually has a number of different fees that are wrapped into the actual cost. So you could have to pay a fee for insurance. You could have to pay a fee for sanction to use it for I-20. You can have to pay a fee for foreign exchange conversion to actually pay the school. There are all these different fees that can be wrapped up into it. These are all within that APR figure. So as you can see, if you, and actually looking at the comparison, potentially if you took that low interest rate loan, if it had a lot of fees, that interest rate could actually become a much higher APR, and in fact a higher APR than a loan with a slightly higher interest rate, but one that only has one fee or low amount of fees. So it's really important to consider that APR is not the rate at which your interest accrues, but it's a way to compare those and really understand, okay, what are the fees that are going into this loan overall? If you are looking at other lenders, and I do remember in the poll question where some people said that they did have a loan sanction letter from another lender, or maybe looking at other options, please ask the other lenders that you're working with to disclose all of these fees and their impact on you. It's super, super important because that will determine how much you will actually be paying to this lender over the course of the loan. So interest rate is not the only component. APR is really important to understand what all of those fees are.
I would like to add one more thing about the APR, Zach.
Sure.
So many people I've referred till now, like around 40, and everyone asks about APR. Like they get confused about APR and the interest rate. Just don't think that APR is your interest rate, as Zach mentioned. It is not. So every time I'll have to spend at least like 1 day or 2 days, couple of days on APR, just telling them no, that is not your interest rate. So just don't think about APR as your interest rate. As I mentioned, it's just a tool to compare. So it will be the overall rate, including all your fees. So if you still have any questions, you can always reach out to Prodigy staff, or you can even reach out to me. So yeah, that's all. Like APR is the main concern for students from India, because I don't think so Indian banks use. I mean, we have not heard of APR and interest rate, like two different rates, so they get confused with that.
Thank you, Supriya. Very helpful to get your experience with that. Thank you. So going into the next area of concern, and I know some students were interested in what do repayment scenarios look like. So I think this chart really, in this table really encapsulates what a repayment scenario will look like. So as you can see here, this is taking into consideration a $60,000 loan over a 2-year program. So as you can see here, we have a total amount of $60,000, $30,000 per year, and the standard disbursement pattern for Prodigy Finance is an even split between first and second semester. So $15,000 dispersed in August, $15,000 dispersed in January, and then the same for the second year. So as you can see here, this is what the admin fee would be charged for this first year. And then actually this should say second year, but the admin fee for the second year as well. You'll then see here how the interest actually accrues. So you accrue interest, you start accrue interest on the principal amount. So the principal outstanding would be $15,000 plus the admin fee of $750. And you would actually accrue simple interest based on this interest rate on that principal amount. Once your second disbursement in that first year is dispersed, you will then start to accrue interest on that $30,000 plus that original admin fee. And as you can see here, this is the interest that you would accrue on this interest rate. And furthermore, you do the same thing in the second year. So all of this together will show that this is the interest that you will accrue And this is the total amount outstanding. Sorry about that. This is the total loan amount outstanding as you end the program. So as you can see here on the right, here's a big breakdown of, okay, this is how much was borrowed. This is the simple interest that was accrued. And this is the total loan amount outstanding. So this is the amount that you will start to repay. So remember that you still accrue interest on the outstanding amount, but as you make those monthly repayments, you will begin to reduce the loan amount outstanding so much that you will actually close out the loan in total. So this particular scenario is based on a 15-year loan, so 180 months, as you can see at the bottom. If you were to take the full 180 months to repay, you would need to repay $728, a little bit more than that, $728 a month to repay that total amount over the course of the 15 years. However, as interest is only charged on a reducing balance and there are no fees for early repayment, let's say you wanted to repay the loan instead of 15 years in 7 years. So that's 84 months. If you wanted to do that, you would simply need to pay a larger monthly payment. That exact monthly payment would be $1,143.87. That would be the EMI that you would need to repay to actually repay the full amount that you owe. And as you can see, if you had the luxury of paying a higher monthly repayment, so instead of the EMI for 180 months, the EMI for 84 months, you would actually save $35,000 over the course of the loan that you would have paid had you had taken the full 180 months. So I hope this gives you a little bit of an understanding of how interest is accrued, and then if you were to pay early, how much money that would actually save you over the course of the loan, as opposed to waiting the full 180 months to repay. If you have any questions on this, please utilize the questions box. Supriya and I can get back to you on this. I actually want to open it up to Supriya. Have you started thinking about your repayment schedule at all? Do you have any thoughts about, I know you'll be working in the US, so do you plan to pay more because you'll be earning more initially when you get out of graduation and you work up in Santa Clara, or are you thinking of how you plan to schedule your repayments in this regard?
Yeah, sure. So actually, I would wanted to tell this point as well. So in many of the companies over here, they actually pay your education loan. I mean, help pay your education loan if you have taken the loan from US banks, right? So NVIDIA is that company. So it gives me it reimburses 6,000 per year for me as my education loan. It gives total amount of 30,000, which is around 5 years. So I would not want to finish my loan before that. And also about the EMI, I think mine is around 700 per month that I have to pay. But I was planning to pay it 1,200 or 1,500, 1,200 to 1,500 per month, so that I can finish it off take not more than 5 years. And so the internship money would also help you pay back. I've already paid 12,000 when during my summer internship. So as per my calculation, it should be done within 5 years. If I pay if I be with NVIDIA and I get the same pay as of now, it would be done within 5 years. And that is one more plus point, that if you have taken loan from the US, few of the companies, they help you pay the loan.
That's great to hear, and really good to understand, the psychology of a repaying student and trying to figure out what are the questions or considerations, like you're saying, where are you going to work, what is your expected salary versus how much can you afford to repay in that, because like I said, with Prodigy, we are anticipating your future affordability based on a wide scale, but obviously every student and repayer is different. So whatever is available for you, you should be able to take advantage of that, whatever makes you feel comfortable. So thank you so much for that perspective.
Yeah.
So I have a slide here with respect to choosing between Prodigy Finance and maybe some other lenders. So I hope this gives you a snapshot into what are the pros, what are the cons, etc. Like I said, collateral and cosigners are never required with Prodigy, and I think that that's a really key component to our business. And so if you are struggling with that, please know that Prodigy Finance exists to help you out. Or if maybe you do have a collateral or have a cosigner that is available for you, think a little bit more in terms of, okay, do I really want to burden this person to be a cosigner, or do I really want to burden my parents to actually put up a house as collateral, etc. So that's something to really consider. Furthermore, really look at all the fees that are associated with these loans. A lot of other lenders include hidden fees that you might not ordinarily see or even think about or even be disclosed earlier on in the process of getting a loan. So that's really important to consider. And then remember, with Prodigy, there's only one fee ever, and that's that 2.5% admin fee. A big thing to consider here that we actually haven't discussed yet is you're taking a loan in USD. Other lenders you may be taking a loan in INR or some other currency. It's important to consider, okay, where are you attending school? So what are you actually paying to the school? And then where will you be working? So in what currency will you be earning and then repaying to that lender? And I will tell you that a lot of students that I've spoken with in terms of taking an INR loan is that it actually opens you up to a lot of currency fluctuations and FX risk. If you know that you're going to a school in the US, taking a USD loan ensures that you have the right amount of money to pay the school exactly how much they need. Secondly, if you plan to work in the US after graduation, like Supriya, take advantage of OPT, etc., you'll be earning in USD and actually insulating yourself from risks to actually repay in USD. So if you were to have to pay in INR and earning in USD, and potentially there could be appreciation of INR to USD, there could be some risk in terms of actually having to pay more as opposed to less than you originally forecasted. So it really is however much you're comfortable with taking a loan in USD versus INR, but really do some thinking in terms of what is the best path for you. Furthermore, repayments, as Supriya and I were just speaking about, you don't have to pay anything during studies. So we think that this helps you focus on your studies, so you don't have to be making interest payments during school, etc. But remember that you are always able to, should you wish to make payments during school. So that's something to consider. And lastly, I just want to share with you a couple of the membership benefits that come along with Prodigy Finance. So, we work closely with the Association for Indian Students, making sure that you have a great experience on campus with great clubs like the AIS. But we also do offer a number of different benefits. So things like careers courses, so supplementing the work that the careers team at USC does. We help you determine, okay, what is the job that you're really looking to get to. We help with resumes and CVs help and things like that, networking events, how to best land an internship. There's a number of different courses that we can offer. And the rest of this here, things like mobile packages, guides to life in Los Angeles, a lot of what the AAS offers as well, but this is another great supplement to your experience at USC. Furthermore, you can get compensated for actually spreading awareness about Prodigy. So we have a referral program, as well as students can win scholarships with Prodigy Finance too. So there's a lot of great benefits that you can avail besides getting a great loan with Prodigy. Here's a couple of pictures of us on different campuses around the world. All right, so that's the end of this presentation. We have a couple of minutes to go over Q&A. So if you do have any questions, please utilize the questions box. I see there have been a couple of questions so far, so thank you very much. Let me go through those, and then I'll have me or Supriya answer those questions, and we'll get to those in just a moment. So thank you so much for joining us. Let's see.
I'm not able to see the question box.
Yeah, so I can see them here. I'll go through them now. I do have one question regarding just connecting with incoming students. So maybe I can first say that Prodigy Finance has a number of groups that you can get in touch with students who are going to school in the US and then as well directly at USC. So if you're not involved with the Prodigy Finance WhatsApp groups, you can join those. You can join those today and actually get connected with incoming students. For the person who asked that question, I can actually share with you if I go here to this resource page on our website. These are a list of all of our.
I am Mukesh Popani. I am from Mumbai, India. I am going to pursue my master's in computer science at University.
Sorry, that was a video. We have a number of the WhatsApp groups listed here. So what I can do is actually share this in the chat box where you can click and actually go find those links and actually invite yourself to all those groups. So that's great. Maybe Supriya, if you want to mention, were you able to connect with incoming students in any particular way before joining USC?
Yeah, actually that time, I think 2 years before, we didn't have this all, WhatsApp group and stuff. But I actually contacted, 2-3 persons from USC. I looked into the Prodigy Finance website, and there was this, I don't remember exactly what it was, but there were a few students from USC. So I got in touch with them. I contacted them via LinkedIn, and also I asked Claire, she's my Prodigy Finance, she was my agent. So she gave me a few of the contacts whom I could contact. So I spoke to them, and yeah, I got whatever I needed about like Prodigy Finance. So that's how I connected. But now you have a better, platform to connect. So I think the WhatsApp group is really cool. This is what is more important, like, about Prodigy. They're very updated, they're very cool. Like you get all you need. So WhatsApp is really cool, I guess. So I have heard people saying it's good. I mean, the people who joined like last year, they were mentioning about it, and WhatsApp group has been really helpful.
That's great. Thank you, Supriya. I also know that there are many students that are connecting through the Association of Indian Students as well as you can most likely reach out to the admissions team for your particular program. So there are many different resources, but I would definitely say the Prodigy Finance WhatsApp groups will be a great opportunity if you haven't already joined those. So thanks for that question. We have another question here, just regarding repaying the loan. So a student says, would we be eligible to repay the loan in 12 months itself? So only within those 12 months. So the answer is absolutely. If we go back to this particular slide, which is the repayment scenario. As you can see here, I actually have here what it would take to actually repay this full loan amount in 12 months. So as you can see here, the EMI would be around $6,000 to repay this full loan amount in 12 months. So if you had the ability to repay that and you had that cash available to pay that EMI, $6,000 a month, you can absolutely do so, and you could close that loan out in 12 months. There would be no fees for this, and you can do this at any time. You can do it in 6 months, 8 months, 13 months, however long it will take for you to have the cash available to actually repay the loan in full. We will accept that, and you'll close out the loan, and then you won't owe any further interest payments. So that's a really nice feature with Prodigy Finance. All right. One more. Let's see if we can get one more question here. 1 second. I have a question here around from a student around housing and budgeting. So maybe Supriya, if you could speak to this a little bit, which is what are the ways that a student can go about on campus first finding housing. So if you live on campus or off campus, and then in terms of budgeting, how did you go about really understanding, how to use your money wisely during the program to make sure that you could make ends meet?
Yeah, sure. So yeah, Los Angeles is a very expensive place to be in. So choose very carefully about like where you stay, the housing, and also the USC. One part of USC area is kind of dangerous. So students usually not stay there, even though you get it for lesser rent. So usually the Portland Street and Ellendale, all those places are really good. And of course, if you're willing to share a room with someone, then I think you would pay 500 to 600 per month rent. And on campus jobs are really, really great in USC. You just have to be aggressive enough to apply it before. Actually, you can start applying when you're in India itself. The library jobs and a few other jobs you can directly apply from there. And come here early, like before two weeks before you start the program, and just be aggressive. Go everywhere and like ask seniors, contact seniors. Now that you are in AIS, I hope most of you are AIS members. So you should be able to talk to the seniors, and senior referral would make a huge difference in getting you on campus job. And on campus job, minimum pay is like $12 an hour or something like that. So it would be sufficient for you guys to pay pay the rent, as well as save some at least 100 or 200 per month at least. So yeah, I was lucky enough to get a technical job. So I had like $15 per hour pay. So it really helped me in that way. Sometimes I could save 400 per month, which is like great enough, excluding all my expenses. Like after covering all my expenses, I could save 300 to 400 sometimes. Yeah, that's how actually things worked out for me. As in terms of on-campus job, you'll get a lot in USC. Yeah,
that's great. Great to hear. Thank you for that perspective, Supriya. Hope that was helpful for the students who were asking. So that's great. I think we're running out of time. So before we close, I do want to ask 2 questions. Just firstly, was this webinar helpful for you? If you could please just let me know whether it was, and that would be great. Perfect. Thank you. And then one more. If you could please let me know if how likely you are to apply for a loan with Prodigy Finance. Great. Thank you so much. It looks like many of you are likely to apply, which is a good sign. If you were one of the students who may have said that you're still not sure, that you need more information, please, if you can, send me a chat or a question with your email address. I'd be happy to get in touch with you to answer your questions more fully and help you out with that. So if you could just send your email address or phone number over, I'd be happy to speak with you further on availing your answering your questions. So once again, thank you so much for joining us. Thank you to Supriya for being with us and answering your questions and sharing your experience. Really appreciate it. Thank you to the Association of Indian Students for being able to share this webinar with their students, and looking forward to funding your education and be able to help you out on your journey to USC. So thank you so much, everyone.
Thank you, everyone. Thanks, Zack.
All right.
Bye-bye.
Have a great evening.
Bye.
Bye.
Thanks, Zack. Bye.